Hello, everybody. Hope you are doing well on this Thursday afternoon. Today, we will be doing a webinar on selecting a market data provider. FuturesTrader71 will be going over this. Don't worry, I am just your host. I will not be doing this webinar. To move forward, derivatives trading carries a high degree of risk and may not be suitable for all investors. Please note that there can be a material conflict of interest for your account based on your FCM choice, platform use, and data feed execution. Past performance is not indicative of future results. So some of you might know me. My name is Giancarlo Saracino. I am a broker here at EdgeClear. If any of you, some of you might have heard my webinars. I do a bi-weekly webinar every so often about Edge Pro X. So I will just be hosting and introducing yours truly, FuturesTrader71. He'll be taking on the rest of this. But so our agenda for the day is who is EdgeClear? What is an execution feed? What is data only feed? How can we minimize our costs? MBO data and what is it? Do we need it? And then at that point, you can ask FuturesTrader71 anything. So now I will introduce, and FuturesTrader71 will take on the rest of this webinar. Thank you, everybody, for listening.
All right, thanks for that, Giancarlo.
Of course.
There we go. Giancarlo is going to come back at the end and go over what EdgeClear is. But for now, let's dive into the material here. I'm going to ask you to ask your questions as they come up, right? So don't be silent. If you hear something that I'm not explaining very well or whatever, just ask the question and Giancarlo will interrupt me to let me know. So let's dive into it. First of all, one of the key agenda items here was what is an execution feed? The futures industry is different than equities in that futures are more sophisticated. And so there's a tendency to provide a la carte services. So coming into EdgeClear, for example, you're not just handed one platform, that's all we've got, and one feed, like it or not. There's a large choice of what you'd like, and you can mix and match things as you want. 1 second. You can mix and match things as you want. And so there's a requirement for the trader to have a strong understanding of the details that go into the various feeds, cost structures, what kind of data they're getting, things like that. So the first thing we're going to cover is an execution feed. So there are two types of feeds that provide data to you to trade off of. There is your execution feed. This is known in the business as the order routing feed. And then there's the data only feed, which is known in the business as a quote feed. These run simultaneously. They might run on different channels, but in general, you're sending order or execution data, and you're getting market data and also getting confirmations from the exchange and so on and so forth. Execution feeds generally follow what's called a fixed API protocol, which is a standard in the industry for sending and receiving order data and messages from the exchanges. Execution feeds can also provide market quotes, but they turn into a bit of a custom protocol. And so every data provider has a custom protocol, and that's why a lot of times using your front end, whether it's Sierra Chart or Motive Wave or Bookmap or whatever, every so often something changes and then something breaks or it doesn't work so well. The reason for that is because there's so many options and paths to the market, there are also more areas where things can break. In general, these are caught very quickly. You don't see them often, but if you do, just understand that it's because of the sophistication and the complexity of the futures market. An example of execution feeds, an example of that would be Rhythmic. This is the data, this is the execution and data feed that I use. Well, it's the execution feed that I use on my Edge Pro X platform. This is my preferred data feed. There's also CQG. There's TT. Some of you may have used TT either directly on the web. Some of your more seasoned traders may have used TT as XTrader, XTrader Pro, and many have used it as the TT order routing system for Sierra Chart. Then there are full service broker dealers like Interactive Brokers, TD Ameritrade / Thinkorswim, which also provide execution feeds. And we'll talk in a minute about what the difference between them is. The key differences with Rhythmic provides what's called MBO data. This is market by order data. It provides you with full depth. It gives you a lot more information. It requires certain things. We'll go over MBO data in a later slide. It's the last thing we're going to talk about. We're going to talk about whether or not you need it. Rhythmic also provides plug-in mode, which means that you pay for market data once, you pay the access fee once, and you can connect several different platforms to that same feed. This is very unique to Rhythmic. It's a low latency feed. It's a very very concentrated direct market access feed. It provides non-aggregated data. They provide also co-location services for those who are automated, and it comes at a low cost. This is why I prefer this feed. There's also CQG, which is a really good and popular feed. It provides market by price, which is the traditional thing you see. If you're looking at the S&P, let's look at the market here. The market, of course, this is live here. The market's already closed. If you look at the DOM that I'm showing you here, you'll notice that it goes a lot farther than 10 levels. That's market by price. That's the kind of legacy or the older data feed where you can only see 10 prices up or down, maybe sometimes 15. But this with MBO, market by order, I can go and see orders up at 4,500 and see what's going on up there. I can see orders at 4,520. I can go as far as there are orders. I can keep going and going and going. It's only limited by my platform here, Edge Pro X, but I can go as high up and down as I wish to go. That's what market by order does versus MBP, market by price. So CQG uses market by price. It has a limited depth. The advantage with CQG is it has many data centers around the globe. It is widely used by other execution feed providers. So if I'm not mistaken, the last I checked, Gain Futures, for example, Gain's platform, which is white labeled under many different labels, uses CQG on the back end. Tradeovate, I believe, uses CQG on the back end. And various other providers use it on the back end. It's expensive when you connect more than one platform. If you need to run, for example, Jigsaw and Sierra Chart, you're going to have to pay for 2 connections. You're going to have to pay twice the access fee and so on. And now you're running multiple data feeds. You're paying twice the data feeds and so on and so forth. It does not have plug-in mode. The other one's TT. The other one's popular is TT. Also a market by price feed, limited depth, many access points as well. They provide no API. You'd have to go to the Pro version, which is very expensive. Even the retail version, as they call it, is pretty expensive. It's $100 a month plus 50 cents, and it caps at, I believe, $700, something like that, or 1,000. We'll look at that in a minute. This is really designed for professionals. Okay. Let's move on and look at interactive brokers. So what are the key differences between these feeds? Also an MBP feed, limited depth, aggregated. So as far as I can find, and I'll substantiate that by showing this GitHub page from interactive brokers, they're pulsing the data at 250 milliseconds. So if you compare interactive brokers with, say, Rhythmic, a lot of times you'd think that interactive brokers is very steady and doesn't cause any issues for you. But a lot of that has to do with the fact that the data is pulsed or aggregated or coalesced is another word for that. And it's being done at, according to them, at 250 milliseconds. That means you're getting a snapshot of the market 4 times per second, as opposed to for every millisecond that goes by or whatever. Hardly any tech support. The advantage, of course, is a variety of markets provided and limited historical data. TD Ameritrade, Thinkorswim, same thing, market by price, aggregated data, no real third-party support, as far as I can tell. A variety of markets provided, expensive for futures. Their platform is free, but their commission structure is nowhere near competitive with someone like EdgeClear that provides direct market access. So let's take a look at a data-only feed. A data-only feed is simply running the quote feed. It is not running the order feed. You're not able to put orders through a data feed. It is designed to give you high quality, real-time or historical data, market data, and it also incorporates, generally it incorporates additional market indices like the breadth or advanced decline, tick, TRIN. It gives you, various things that an execution feed does not generally do. There are combinations like CQG where you get the order feed, you get historical, and then you get some of these indices, but you're paying more and more and more for that. This does not include execution capabilities, and it's really, these are really good at providing historical data. Examples of data-only feeds is IQ Feed, which I use for my charts. I use IQ Feed. It's a professional product, but also it has really tremendous access to historical data. I mean, they've got 20, 25 years of data going back. They have 180 days of tick data, uncoalesced or unaggregated, non-aggregated tick data, and so on and so forth. Another quote feed is Denali that was created by Sierra Chart, which is now being connected to an execution feed, right? The Denali, if you use Denali with Sierra, you have to go through TT, or you have to have a connection to Rhythmic or CQG or various other providers. Denali is really designed to be a really good data-only feed that's now being enhanced to also handle orders. Okay. How can we minimize our costs? So this is the point of this this presentation here. One thing to keep in mind is nothing is ever free, right? So the cost of maintaining technology is very high. Developers are very expensive. Servers are very expensive. 10 gigabit per second lines to the exchange are very expensive. So companies like Google and pretty much any online free service is providing you with Gmail for free and Google Maps and various other services for free because they're selling your data. So their model is operating in such a way that there's revenue, tremendous amount of revenue generated by selling you someone else's product. So at the top of your Gmail account or your Hotmail or Yahoo or whatever, you're going to have advertisements that are targeted to your needs, and that's how they do it. Companies like Robinhood, Thinkorswim with the commission-free equity trading, they're selling your orders, right? This is not permitted in futures. This cannot be done in futures. Futures are predicated and designed so that You're never trading against the broker. You're never trading against anyone but another market participant. So you're never trading against the exchange, your broker, your clearing firm. So there's no opportunity to sell your orders to Citadel or Virtu or any of these people that are buying that information from Robinhood or Thinkorswim or Schwab or whomever is offering you free trading. This is not free. This is your information being sold to the highest bidder, and they get to take a look at your orders, your stops, your orders before they hit the open market, if they hit the open market. Anyone with a free platform in the industry or is offering free data is doing so by including those costs in your commission or fee structure, period, because people have to pay their bills, right? Nobody's doing this as a hobby. There are 5 categories of costs in trading. There's the commissions and clearing fees. These are negotiable. People like Giancarlo or Ian or Max or anybody at EdgeClear is able to go and negotiate down your commission if you're highly active. We'll look at what causes that to be negotiable here in a second. Exchange and regulatory fees are fixed. Nobody can adjust those for you. Market data fees are fixed by the exchange that's selling that data. That could be CME Group, that could be Eurex, ICE, whomever you're using. Platform fees are fixed. Usually these are charged by the vendor of the platform. These are things like Jigsaw, Bookmap, Multichart, Sierra Chart. You have to pay a monthly fee to get access. And then there are monthly access fees for the execution portion. And that's where CQG, Rhythmic, TT, and so on. The execution side, there's no point in getting all this data if you can't execute on it. And so there's an access fee to the infrastructure to execute your order. And then in addition to that, there are transaction fees. I've taken the time to break these down for you. Again, if I'm going too fast here, or if you have questions, or if I'm confusing you, or if I'm saying something to be wrong, just go ahead and type that into your chat box and Giancarlo will address it, or will interrupt me so I can address it. So let's break it down. Commissions and clearing fees depend on what product you're trading. Are you trading a micro? Are you trading an option? Are you trading a mini? Are you trading a full-size product? That's going to determine what the commission structure is. In addition to that, the quantity of contracts traded, how many contracts do you trade a month? Remember, a business like EdgeClear has people to sustain. Those people have rent or mortgages to pay. Those are all kind of fixed costs. And the revenue by a broker is generated pretty much entirely through live trading. It's when somebody executes in the live market, a portion of the cost that you pay goes to the broker. So the broker has fixed fees that are compensated for using incremental commissions after paying for clearing fees on your behalf. And so, or actually the clearer pays the commission back once they take their fees. And so the higher the quantity you trade, the more opportunity to reduce your costs. The other piece that might influence the commission structure or clearing fees is your equity amount in the account. If you're depositing $1 million, your commission structure, whether or not you trade, is going to be different than somebody who's putting in $1,500 to trade a micro contract. And then the other thing is the level of risk management needed. So if you're running something that's sophisticated, that requires a lot of monitoring, you're pretty much consuming a resource, a person who's paying attention to what you're doing, and so your commission structure is also impacted in that way. It's rare that it is, but sometimes it is. The other category we talked about was exchange and regulatory fees. These are fixed. The exchange tells you what you have to pay in terms of exchange fees based on the product. For some exchanges like the CME, it depends on whether or not you're a member. I'm a member of the exchange. My commission structure is going to be different for the product category than someone who's a non-member. Members get much lower rates. The NFA fees do not apply to members, so EdgeClear provides services for those who trade enough that they want to lease or get a membership, which are relatively cheap these days compared to where they were, I don't know, 10, 15 years ago. It makes sense sometimes to just buy a membership to reduce your cost structure. That could be a tremendous way to cut down on your cost if you're trading a certain number of contracts. The last I checked, it was like 75 sides a day or something like that. Beyond that, you should be a lease member or an owner of a seat in the exchange. And then the other piece is the incentive programs by the exchange. These also have sometimes can reduce your fees. If they're promoting a product, you might be able to trade it for free. For example, right now, Farex products are completely free except for the NFA fee. They're completely free, including the CQG data feed. So this is the type of thing where a product's being promoted and your fee structure is impacted. Market data fees are based on the exchange we're accessing, the products we're accessing, whether you're a professional or non-professional, the number of devices accessing the data. This, by the way, is a really sore point for me and pretty much anybody who's a professional in the industry. These data fees have been just a tremendous drag on traders and everybody in between. The amount of information that's collected to make sure that you're paying your fees properly is pretty insane. But if you are registered in the futures industry or if you're trading on someone else's behalf, there's certain markers that would require you to become a professional, to declare yourself as a professional, and you would be paying something like $110 or $115 per exchange on the CME. If you're a non-pro, if you declare yourself as a non-pro, then the fees are something like $3 top of book. Correct me if I'm wrong, Giancarlo, but I think it's $3 for all 4 exchanges top of book, and I believe it's going up for full depth. I think it's $33 now for full depth or something like that as a non-pro. So it makes a big difference how you set yourself up. Some companies like TD Ameritrade, if you open an account and try to trade through an entity, you're immediately considered a professional trader. So it's just better to deal with a broker that understands your situation and can determine what your structure should be. Also, how the data is used. Is it data that you're consuming? Are you displaying it to others? All of that is going to impact how your cost structure is. And of course, if it's real time versus delayed data. Platform fees are set by vendors. Which software do you use? What level of software? Do you pay on a monthly or do you pay annually? And what kind of technology is it built on? If it's if it's got mobile, then there are additional fees. If it's just a thick client, traditional, it's less, things like that. And then monthly fees are set by feed providers. So in general, the feed providers require a payment, a fixed payment per month. It's something like $10 for CQG, and I have a chart that shows this. It's $20 for Rhythmic. It's $100 for TT. This is a fixed cost, a fixed fee for you to be able to see the market data in the first place. So how is this impacted? How are we accessing the data? Is it fixed API? Is it web API? Is it some special protocol? So therefore you have to pay these additional fees as a third-party developer. How many platforms of feeds are we connecting to? That has a huge impact on what the monthly fees are. For example, CQG forces you to pay for each additional feed that you require. Rhythmic does not. This pays the vendor for their overhead costs and infrastructure. Transaction fees. Transaction fees are per contract fees charged by the data provider, paid on live trades only. Transaction fees, commissions, clearing, all that stuff is only charged on live trades. Sometimes these are capped. So TT, CTS, and other platforms cap these, but they charge more in transaction fees up front. and they're uncapped, or they're uncapped like they are with Rhythmic, CQG, and others. This pays the data vendor for maintaining the route to the exchange, netting engine, all the iLink, the data lines, things like that to actually execute your orders. Here's a summary of those fees. So we'll talk in a minute about what your needs are, right? So this is a summary. The columns are expressing a summary of what these feeds do or don't do. If you look at Rhythmic, and you'll see the reason why I prefer it, it's an execution feed. It's also a data feed, as I said. It provides all the data that you see here. I don't have to have an additional data feed to be able to use it. And the data will go all the way back to the beginning of the contract. So it provides data as far back as the contract has been trading. This is the only MBO feed on this chart. It provides auto liquidate services. The auto liquidate, which we use extensively here, can be set by the trader, can be set by the broker, and can be set by the clearing firm. And this will simply exit if it's set by the trader, it'll exit your trade at a preset daily loss limit or some other limit. There's a whole variety of limits you can set. If it's executed by the broker or the FCM, it'll close your trade and lock you out for the day. And this is a very important service for many traders who need it, who may find themselves fighting the markets. Plug-in mode simply allows you to run multiple platforms on one connection, one market data feed, and one platform. The only one that provides that is Rhythmic in terms of execution feeds. Very important, very useful. It makes up for the monthly access fee that Rhythmic provides. If you're running two separate platforms on CQG, you have to have two separate access fees, two APIs, two market data feeds, exchange feeds and things like that. Yes, Rhythmic has an API. It's non-aggregated, low latency. The access fee for Rhythmic is $20 a month, and there's a transaction fee of 10 cents. It also includes their platform. CQG, a yes for execution, yes for data. Tick-by-tick data is provided for 30 days only. It is not MBO. It does not have auto liquidate, does not have plug-in mode. It does provide an API to which many different platforms, including Edge Pro X, can connect. It is non-aggregated data. The access fee is $10 a month per connection, and a transaction fee is 10 cents. At this level, it does not include a trading platform. With CQG, you have many different levels, and to move up to a level where you're getting access to, say, CQG Trader or some of their other platforms, there's a monthly platform fee in addition. TT is an execution feed, has historical data. It is tick-by-tick data. It is limited, but I couldn't find limitations, what the limitations are, but I know the last time I checked on it that the look-back data is limited. Correct me if I'm wrong, anybody, but that's what it looks like to me. It is not MBO. It has auto liquidate, but it's very limited on how you can set your auto liquidation. The parameters are quite limited. Does not have plug-in mode, does not have an API to third-party vendors, so you can't plug in your book map or whatever into it. However, if you're a platform vendor like Sierra, you can route orders through TT for a fee. So it does not provide an API that us traders can use. It is non-aggregated data. That means they don't pulse it or slow the data down or coalesce the data. The access fee is $100 a month. The transaction fee is 50 cents, and I think it's capped at $700, I think, a month or something like that. And it does come with a front end. Interactive brokers, it's an execution feed, it's a data feed. The historical data is limited. There's no MBO, no auto liquidate, no plug-in mode. It does provide an API, which is quite widely used. The data is aggregated at 250 milliseconds. per update. There is no access fee. The transaction fees and the commission structure and the platform, they do have a platform. It is relatively limited. However, it does provide you with access to Forex options, various global markets and things like that. They're a giant in the industry. TD Ameritrade, Thinkorswim, same thing. Yes for execution, yes for data. Limited historical data as far as I can tell, and then no MBO, no auto liquidate, no plugin mode, no API, and no the data is aggregated, but I have not found where they disclose what that is. The access fee is $0, the transaction fees and the commission, and the platform, they do provide a platform. Again, it is limited as to what you can do with it. And then there's the data feed provider that I use. There are others, Bar Chart, Denali, eSignal. There are many others, but this wasn't intended to be like an exhaustive list. I just put that in here as an example. IQ Feed, no execution services. It is a data feed. It provides tick by tick data for 180 days. It provides 20 some odd years of 1-minute bars. And just a ton of data. It's very IQ Feed is DT and IQ Feed is really just that's their specialty, is market data. No MBO at the moment, although that's apparently coming. There's the auto liquidate doesn't apply to them because there's no execution. It does provide plugin mode through their IQ Feed connection manager. It does provide an API. It's quite comprehensive, and it's non-aggregated data. However, the access fee is $95 per month, and then you have to pay an additional $20 a month for futures on top of your data fees. There's no transaction fee because it is just a data feed, and it does not include a front end or platform. Okay, so how do you reduce your cost? The question about, so I'm going to keep this up here and just talk for a minute about how you reduce your cost. You can reduce your cost by being very realistic first and foremost. So if we go back to the slide of what are all the fees, the biggest part that would allow you to control your data cost is really down to your broker. And that's not the commission structure that they can provide. That's your broker learning about what your needs are and then designing a solution that takes advantage of or maximizes your fees to your advantage. I'll give you an example of that. You show up, you talk to Giancarlo, and you say, look, I am using Bookmap, and I'm also wanting to feed Sierra Chart, or I'm also wanting to feed, pick another platform, MotiveWave. I need these to run with market data, live market data. I also would like to trade the micros and so on and so forth. Knowing that you're going to be feeding two unrelated third-party platforms at the same time, they're going to, that with the amount that you believe you'll be trading every month, and the type of risk or the amount of capital you're putting in, they can then just figure out that, hey, okay, since you're running two platforms, you're going to need to run Rhythmic and plug-in mode. This is your commission structure. Looks like you're saying you're trading about 100 sides a day. So you might be clipping 20 lots or something like that. Then look, hey, let's do an analysis and look at a CME membership for you. Here's the membership cost structure. Here are the fees. This is how long it would take you to recover the cost of the membership and the application fee, and net by the second year, we may be able to save you, for example, $14,000 a year in your fee structure. And it's by looking at and studying and then providing to your advantage the best solution that minimizes these 6 categories now that I look at it instead of 5. Let's change that to 6. How about that? So we can go ahead and figure out how to minimize these. If, for example, you want access to an exchange or a product that is not supported by Rhythmic, and CQG is your next best bet. Okay, I need to run Sierra chart, and I need to run Jigsaw, and I'm trading some exchange that Rhythmic doesn't support, but CQG supports it. Okay, cool. Here's what we'll do. We'll run CQG, 2 CQG feeds. One of them to Jigsaw is going to need the full depth, so you can pay the full depth once there, but the second feed may have top of market data, so you'll only pay $3. You'll pay the additional $10, but because you're active, we can reduce your commission structure X amount to make up for these costs. And by the way, once you reach this threshold of activity, we can go ahead and look at potentially getting you a seat or something like that if that exchange provides it. So the expertise that's provided by a broker is like having is the difference between doing sophisticated taxes on your own or going out and buying a piece of software that does it versus having a relationship with an accountant who understands your business, your personal life, whether or not you have kids, what kind of an education, savings program you need, and to try to maximize your efficiency in terms of taxes. That's really what you're looking for there. So when it comes to cost, it's not about, oh, well, this particular broker is giving me a platform for free. You're paying for it somewhere else. And the best possible solution. Look, I've been trading for 21 years and I'm using Rhythmic, and it's you have the same access to the same data and the same information as I do. It's relatively low cost versus what I used to pay for, say, TTX Trader Pro, which was $1,650 a month. That's $1,650, $1,650 a month, plus $440 a month per device just to see the market data. It can get pretty expensive, okay? Let's talk for a minute about MBO data. What is it? Do we need it? So we talked earlier about 2 types of data, MBO and MBP. And I'm going to pop in a website here. If you do CME Group space MBO, you'll drop into this page, and this page explains what MBO data is and how it really changes the kind of information that you have. Do you need MBO data? If you're an order flow trader, I personally believe that you should not be trading on non-MBO data. You should be seeing the full depth. You should be able to break down the market information. As I said, in this platform here, I can see where the blocks are, where the block trades are. That's what MBO provides. So if you look at 44, 45 even here in the S&P December 2021 contract, there are 174 contracts on the offer. And you see the purple there, that comes to us from MBO data. It is breaking down the orders by who's putting that information in. So I can see that out of 174, there's approximately, if you eyeball it, there's approximately 60% of that 174. I would say maybe 100 out of the 174 is a single block order, right? And you get this at every price. This information does not show up, and if it does, it's usually a guess, unless you have MBO data. That's the transparency that is mentioned on this page. The first thing I talk about, client benefits, increased transparency. That's the transparency. There are also tags that can tell a trading platform the type of order that just went through. Is it a stop or an iceberg? One of the platforms takes advantage of that is Bookmap, for example, but that information can only be had through an MBO feed. And so this kind of thing is really significant if you're a short-term trader, which is what I am, a day trader, somebody who's using order flow. This stuff becomes very important. Now, if you're running a fund and you're looking at monthly charts or whatever, you can use pretty much anything. But this is more dedicated towards those who are actively trading and looking and squeezing as much edge as possible. So there are two data feeds, MBO and MBP. Let's talk about MBP first, market by price. This is your typical data feed. This is what's available pretty much on every platform out there. It's got limited depth, usually 10 prices up, 10 prices down. It shows the aggressor side reporting. It shows actually the receiver side. I apologize. No, it shows the aggressor side. And so what it does is it reports, let's say you're executing a 10 lot at the bid. So you're selling 10 contracts. What it'll show is that to you on your tape is it'll show a bunch of 1 lots, a 2 lot, and maybe a 3 lot went across. What it doesn't show is that actually what executed there was 10 contracts. Okay, so that information is hidden. That information started being hidden in 2005. I remember almost to the day when that happened. And so the tape became very opaque to someone who is scalping, which is what I was doing. It became harder to see what the intent was. What are these 1 lots and 2 lots and 5 lots going across? Are they single executions, or is it a fill for a 10 or a 20 lot? You must guess on order flow. So you have programs that do things like the reconstructed tape, which is really a guesstimate. You know, a bunch of trades went off within a certain number of milliseconds of each other. Okay, let's just bundle those together so we can create a guess as to what that order was. It's just a guess, right? That's what MBP provides, but it has the advantage of needing lower bandwidth, right? So with MBP, you don't need heavy bandwidth because the messaging um, is not that complicated, it's not that difficult, but also you don't need the huge processing power. You don't need an i7 11,000 or whatever, 11th generation CPU with a good graphics card and all this stuff to crunch all this data. That's a huge advantage for MBP. So if you're on the go or if you have a low powered machine, MBP is the way to go, or you need to just pare down the amount of information you're looking at so that it can handle MBO. MBO, market by order, it's really capturing advanced data messages. There's a lot of information that the exchange is pushing out that unless you're on MBO, you're not seeing that, your platform's not seeing that data. So what it's providing is transparency on book composition, just like I showed with Edge Pro X. You can now see what the book is made of, right? What's in here. Full depth of book, talked about that. You can see as far as the market, as far as there's an order. If there's an order 1,000 prices up, you'll be able to go and look at that order. You have an accurate known positioning queue. So if you're queued in, let's say you're looking to sell 44.30 today, by the time the market goes up there, you'll be able to see you'll be able to have an indication whether you are at the front of the book, at the front of the queue at that price, or if you are in the back. This is really important for scalpers. It is really important for short-term traders. It's especially important for people who are looking to scale out, because getting that scale can make a difference between a trade that turns around and gets scratched once your stop gets hit, or if you're going to get a full stop because you are queued very poorly and you should have moved that order a little tighter to get yourself a fill before the market turns. The ability to see the order type, so you could see whether it's a stop order, an iceberg, or whatever, you can track these things. It requires higher bandwidth. So, if the market's moving quickly, a lot of times when you have rhythmic users that complain of lag, what you what I hear from the brokers here is they get on, they remote in, and they find that the person's running Thinkorswim, and they're running 16 browsers, and they're looking at 5 different markets. They're looking at full depth on 5 different markets and so on. And they're on, say, on a 25 megabit per second download speed on their internet connection. That's not going to work. You need for every market you're getting thousands of times the data on MBO as you would traditionally. So somebody the other day, somebody was saying, well, I never get any lag issues with my interactive brokers connection. Sure, but your interactive brokers connection is giving you a snapshot 4 times per second while an MBO feed is being updated as the market data is being updated in real time. And on certain levels of service through Rhythmic, you can look at it down to 100 nanoseconds. So there's, do you need that much data? For me, for 20 bucks a month and 10 cents in transaction fees, it's why wouldn't I get that advantage? Okay, so MBO to me personally is very important, but to others it may not be. That's all I had for you. We've covered about 45 minutes here. Are there any questions, Giancarlo, that I can address?
No, actually, me and Ian tackled pretty much all the questions. One just came in right now that was not sure if this is off topic, but how does data licensing work for the web application TradingView? How is the data provided to us for free on TradingView? Are they paying for some other type of license? So basically asking how TradingView offers their data for free.
So I don't know. I can't tell you how they're doing that, but there are deals that can be made where I believe TradingView, one of the key feeds is CQG, and a lot of times they can make what is a bulk deal. So TradingView may be big enough that it can just buy it for everybody.
Mhm.
But
Can
at
I
the end
can
of
I
the
chime in
day,
here, Mored?
yeah, go ahead.
So it's Ian. Hi, everybody. I've been in the background here. One thing on this TradingView thing, I'm not sure if you're referring to actual futures market data, or if you're just referring to the broader TradingView equities market data. Because as far as I know, correct me if I'm wrong, the TradingView data, unless you're paying them directly for it, is not real time. It's on a 10-minute delay for futures markets.
Okay, so oh yeah, for futures. So for futures, you'd have to be enabled for that, and it's to get it in real time. You have to pay additional. Is that what you're saying?
Yeah, that's what I'm saying. So again, at least from what I know people who have subscribed to, I believe they provide a connection to CQG top of book data, and they've had to pay to get real-time access. And then the equity data that they're providing, a lot of times they're actually pulling that from a clearing connection that might not be direct from like NYMEX or NASDAQ or anything like that. So I believe you have to pay to get the real-time data for futures. Yeah, there it is.
Yeah. So this is what's going on here. You do have to pay for it, and it is the top of book. This is just standard top of book. So there's nothing special here, right? So if I want real-time data, I have the pro plan for TradingView. I think I have the pro or the pro plus. So I actually have to go and pay for this. So I guess it isn't free. It could be delayed then. It might be delayed, the 10 minutes delay or something. Not sure. But it's a good question, good point. Anything else, Giancarlo?
No, it looks like you tackled everything else. Everybody was just thanking you.
Cool. So Giancarlo, is a guy who's going to be able to answer all this. Again, I cannot overemphasize how important it is to have a relationship with a broker. I invite you to reach out to Giancarlo. Again, I am the owner of EdgeClear. It is in my best interest that that your support is received at EdgeClear. We are really pushing to build things that are very, very trader friendly. That's where Edge Pro X comes in. I believe one of the slides that we passed on here is a quick run of what EdgeClear is. Giancarlo, why don't you tell everybody what this is all about here?
Sure thing. So now that everybody knows a little bit more about selecting data and commissions, EdgeClear is a futures brokerage. It's an independent futures brokerage. Everything we do here is for we're all traders here, so everything that we do is to help you guys. We have an award-winning team, multiple clearing relationships with Phillip Capital, Iron Beam, and Dorman Trading. Everybody here is experienced, and I'm sure you know the founder, FuturesTrader71. Continuously innovating and building. So we're constantly putting in effort to make our platform better, and then other analytics softwares that we have better. So just we're here to be trader inspired. That's what we're here for. But what have we been up to? We've recently launched Edge Pro X. So that's the platform that I do the webinars on. Go check them out. They're every bi-weekly. We recently launched an ag division to help farmers control their own operations. We also launched a foreign introducing broker program for our international partners, providing commission-free trading on Farex, and looking to expand our EdgeClear team.
Is this the inappropriate place to ask people if they know someone in the Chicagoland area or willing to move out here to refer a client relationship manager? We're looking to fill that position. The team is growing. If you know someone or if you want to apply, you can again reach out to Giancarlo. Here's Giancarlo's information. Oops, here it is. Giancarlo's information. If you want to check out any of the platforms that are, remember, we're an independent broker. Our trading platforms page has a ton of platforms. We pretty much have access to anything under the sun that is open for brokers to sell. And of course, there's Edge Pro X, which is the front end that I use. I invite you to grab a trial of it. It's really designed for active short-term traders. Check it out. You can get to it through edgeprox.com. Anyway, there are no more questions. We'll leave you with that. Thanks for joining us, guys, and hopefully you gained something today about the market and how it runs, and everything that occurs behind the curtains. Thanks,
Before we end
Giancarlo.
this, Morad,
Yeah.
this webinar was recorded. A recording will go out. I know I always get asked this question by everybody in here. You're all great people, but trust me, if I hear that question, if I had a dime for every time I got that question, I would be a rich man at this point. It is recorded. It will be sent out.
He'd be able to afford a Starbucks. Cool. Thanks, guys, and thanks for joining us today. Take care, everyone.